Is America using the correct monetary and fiscal policy measures today? Joining me to talk about politics and the economy is former Congressman Ron Paul, host of the Liberty Report. Dr. Paul, it's a pleasure to have you back on Kitco. Welcome.
David, it's great to be with you again.
Let's start with talking about recent news coming out of Jackson Hole. The Federal Reserve has changed their inflation targeting mechanism. Before, they wanted to maintain a 2% inflation target. Now they want to average a 2% inflation target. How would you define this difference, and why do you think they're making the switch?
Well, I don't know if they know what they're doing, and they're struggling, and they're making the assumption that anybody who cares about finance, especially from a free market viewpoint, they figure nobody knows what they're doing. I think they're struggling. This whole thing, I've made fun of this 2% thing that's been going on for quite a few years, because for me, who believe in sound money, that means the deliberate policy of our government is to steal 2% of the value of the dollar on purpose, and now it's becoming more desperate to have inflation. For them, the inflation is of the rising of prices, which is a consequence of inflation. If they want to talk about real inflation, they have to talk about what the Fed's doing and what the money supply is doing. So this idea that their plan of just saying we're aiming for 2% inflation and we're frustrated because we can't get the prices go up. Well, I think that's a fiction too. It depends on whom you're talking about. The average person has an price inflation rate much higher than 2%. And it's just trying to get people to understand, free market economics from one of interventionism, because, they print all the money. If you accept the fact that that has something to do with inflation, you say, well, where is it going? There's no evidence. Well, what about a stock market? That's evidence that there's inflation. What about bond prices? So it's out there. And this idea that their policies aren't creating enough inflation, what we have to do is average it. So if we're only down to 1%, we have the license to go up to 3% or 4%. There'll be a day, I'm predicting, that once they get their statistics that measures CPIs the government way, they won't know how to turn it off. That happened, and I remember it well, in the 1970s.
We're going to talk about the 70s in just a minute. But in regards to the Fed's dual mandate of full employment and inflation control, you don't agree with their 2% targeting plan. What should they be doing instead to fulfill their mandates?
Well, they shouldn't even be in the business of pretending that. If they want a good, healthy economy and they want as best the employment possible and the most balanced pricing system, you have to get rid of the system. You can't have this artificial system from the Federal Reserve. You have to have a market rate of interest, and you have to have a money supply that's determined by the market rather than by the politicians. Because we're seeing the results of many, many years of this, especially since 1971, with what is happening now. It's the runaway spending. We can't have the runaway spending if we continue to do this. And the fact that they pretend that they can control things, every time they think they have control, then there's a major correction, which we're in the midst of. And I think the financial downturn is the biggest event. Coronavirus is significant, and Black Lives Matter is significant. But the big events that turned this whole thing on was in the fall, when it was realized that the financial bubble was collapsing, and they have destroyed for many, many years the most important function of the market in the money supply are the interest rates. So we destroy the pricing structure, and that's why we have so many mistakes, malinvestment, too much debt, too much government. And it wouldn't happen if you didn't have a Federal Reserve System that thinks that they can manage the economy through monetary manipulation.
Well, monetary policy has responded to the crisis we saw this year with unlimited quantitative easing. This is something that's actually relatively new. We've never seen unlimited QE before. Do you agree with this policy at all?
Not at all, because somebody said, well, what if you were the Fed chairman? What would you do? Well, I said I'd resign, because I wouldn't pretend that I know. They don't know what the proper rate should be. And besides, if the market is saying it's a certain rate, they'll lie to us. I mean, and they'll fix rates. I remember when gold was legalized in the 70s, everybody thought the gold price would soar up, but it had already gone up. But at the time, our Treasury Department and the IMF dumped a lot of gold, just try to punish the people who knew that gold was a haven. So there's a lot of monetary and gold manipulations, but ultimately, the markets are determined by metals, not by paper money.
Dr. Paul, you served in Congress in the 70s and 80s, and from 1997 to 2013. You've seen Paul Volcker in action, Bernanke in action. Do you think Volcker and Bernanke would have done the same thing today in 2020?
He might have had to, because conditions are a lot worse. And Volcker was somebody I found fascinating. I got along with him well, and we had private conversations. And he actually did something that they have done to some degree all along. That is, if things are getting out of hand, if the economy is booming too much, that should be a positive in a free market. A booming economy should be great. GDP is growing, all that. No, when the economy is growing, they think they have to turn it off. And it's worked to a degree until in 1979 and 80, things were very, very bad, but they were able to recoup because of Volcker. He said, look, you just can't keep doing this, and we have to really crack down. But it was painful. And now, though, things are much, much worse than they were in the 70s. 70s was the result of, the conclusion of the Bretton Woods. But what we're in a conclusion now is this modern monetary theory. They keep thinking, are we ever going to have that? Well, we've been having it. It's a crazy theory, and they're at the end of their ropes as far as how long they can do it. And we are coming desperately close to a cataclysmic end to the current monetary system.
There is speculation from economists and analysts that President Trump has been putting a lot of pressure on Jerome Powell to keep interest rates low. First of all, would you agree with this speculation? And second, have you ever seen political pressure on the Federal Reserve during your time in Congress?
Well, it's always there. They deny it, but the pressure is always there, especially in an election year. It has nothing to do with free markets. It has to do with central economic planning, and the pressure was tremendous. But even some of us who have been rather cynical of the whole thing are a little bit surprised that they could get the interest rates down to essentially zero. Yeah. The real rates are zero, and create trillions and trillions of dollars. And people sort of worry, why isn't there more cooperation with Republicans and Democrats and do something about our budget? Well, they did get together all the time, but it's always for spending. And of course, they need the Fed to monetize all the spending. So it's Volcker, I would say, on a temporary basis, on an interventions basis, he pulled it off for a while, but that just meant that the bubble eventually would get much bigger, and that's what we're facing today because it's huge. I happen to believe it's the biggest financial bubble in the history of monetary policy for the whole world, and the correction is going to be very, very violent, and it's already pretty bad.
So what happens when this bubble, the biggest you've ever seen, what happens when this pops, Dr. Paul?
People are going to get a lot poorer. We have been able to convince the people, those who promote this type of a system, that wealth comes out of a printing press. And the distortions have been so great, and it allows everybody to live beyond their means, as it circulates. And the individuals, can get low interest rates, and they get their houses, and the stock market's happy. But it's all tied in with malinvestment. Nobody talks much about inflation and malinvestment. The money goes places where it's really not productive. And that's why we're seeing unemployment rising here rapidly, and the value of the dollar going down, and gold prices going up. So it's a system that can't last, but people who have, and a society that has lived way beyond their means, I'm convinced has to live beneath its means. I compare it to an individual. If you or I lived because somebody was going to give us $1 million every month and we didn't have to work, we'd feel pretty good. Hey, this is great. Until maybe somebody calls the tune and say, oh, we have to stop loaning you any more money because you have to pay your bills. And that's what's happening now. The bills have to be paid. The economy is going to turn down, and a lot of people have already gotten a lot poorer, but it's going to get a lot worse unless we wake up and return to some sound economic and monetary policies.
All right, let's turn to fiscal policy now. In particular, let's start with the stimulus checks that Americans have seen this year. A lot of people obviously would agree with the notion that this has helped A lot of people who have fallen into hard times. There is a little bit of a debate going on. Liberals have argued that this is obviously necessary, while some conservatives have commented that we're headed towards a welfare state, which is not what they want. Where do you stand on this topic?
I think the conservatives are fibbing because they're participants. Everybody said, you'd have to have more bipartisanship in the Congress. Well, I was there and I'm looking at what's happening right now. They're very bipartisan. Even when they're trying to impeach the president, they pause if they have to pass an increase in the national debt. I claim there's only two problems you really have in Washington. It's the conservatives and the liberals, because they all like the spending. They all endorse the Fed. They all endorse the empire to different degrees and for different reasons. But there's a lot of bipartisanship going on. But, the Republicans certainly do talk a better case. They'd like to lower taxes and all. But they've had their chance to do some cutting, but it's politically impossible. So it's not going to happen where, let's get some new good guys up there. We'll get some more libertarian types and we'll start cutting back. It's not going to happen. The pressure is so great that right now, the big argument, they create $3 trillion to bail out the first part of this downturn. And now they're talking about arguing about, well, should it be another trillion or another $2 trillion for the next episode? That's where the debate is. And it just means that people need to get prepared in many different ways.
Okay, so bipartisanship aside, what can we do to help all these people, millions of Americans unemployed? What can we do to alleviate some of this pain that Americans are going through right now?
Well, we have to, identify why they're having trouble and eliminating the pain and the suffering. They're having trouble because of the malinvestment, the deficits and interference in the economy and the interest rates. So you have to stop it. The problem there is you ask a good question because that's the political question. What are you going to do about it? How do you think you're going to get elected if you don't, send them more money? And that's why it'll happen until finally the dollar is, destroyed and they'll have to start all over again with monetary reforms. But it's a almost impossible thing to expect the politicians to do it, no matter how sincere they are. They might go up to Washington with the idea, well, we need to cut back, but only a handful of us ever voted against the spending. Then the spending continues. To me, it's a philosophic position, and it doesn't come from the politicians. The politicians are merely a reflection of what they had been taught in the universities. The people I knew in Congress were all Keynesian socialist types, and they believe it was the right thing. Deficits don't matter, and governments take care of poor people. And yet, if you look at the record, they're the ones who creates the bubbles, and therefore the collapse comes as a consequence of what they did. So it's tough medicine is what it is. So I see it in medical terms. Nobody wants to hear you have to have major surgery, and it's risky because that has to happen in the economy, but it's not going to be acceptable until the final drop of blood is drained from our economic system and the monetary system, because people are going to demand the checks. And the checks sure flowed like never before. Yeah. And they're going to keep coming. I think they're ready to send more checks out and make people happy.
And do you approve of this? Do you think another round of stimulus checks should be handed out?
Absolutely not. I consider it theft. I mean, the government has no money. They say, people a lot of times are reassured, conservatives and liberals, if you need a little bit of deficit financing for wars, and the liberals need it more for welfare, they said the government will pay for this. That's what the socialists really say. Government will take care of it. But they never ask the question, who in thunder is the government? Is it some dictator or is it some elected body that will do this? They have to steal it, and they steal it by direct taxation. But the type of theft that I've been most interested in dealing with is the theft through the debasement of currency, because that is a tax and that is a theft, and you have to stop the theft if you want to ever correct this problem.
How is the Federal Reserve, going back to monetary policy, how is the Federal Reserve going to pay for modern monetary theory? Trillions of dollars printed. Where's that money coming from?
Out of a computer. We used to call the printing press, and we still do. but no, you can't print the money. We would have to have many, many truckloads, trainloads of it. So it's a computer. I mean, it was amazing what happened here in the last 6 months. That those checks came out, and
Yeah.
there were a lot of mistakes. A lot of dead people got checks, but basically they sent out a lot of checks, and a lot of people benefited. And that makes the argument, well, this is desperate times. This is different, so we have to do this. But it's a bad system. You can't correct the system that was built on fraud and theft and overgrowth of government by having more of it. And that's what we continue to advocate. And people haven't really thought through about the most significant question I think people should ask: what should the role of government be in a free society? Oh, I don't want to live in a free society. Oh, that's different. But and then somebody will say, I want to live in a free society. And what should you do? I think, well, the first thing you could do is look at the Constitution, and see what that said. But certainly what we have been following, especially in the 20th century, in this part of this century, that movement toward central economic planning, world empire, paper money, deficits don't matter. We have to take, and it's all done because they're going to take care of the poor, and we're going to create jobs. And they don't realize, if they look and say, look at many times the Fed has gotten us out of a recession. Well, every time the Fed supposedly got us out of recession, they had put us into the recession. Yeah. So they should get more blame, not credit, for getting us out of recession. And right now they're running out of steam. And that's why the current policy is in worse shambles than it's ever been. And they're not going to pop this up again and have this recession disappear and go back to economic growth. We essentially haven't had real economic growth since the last downturn 10 years ago.
What about tax policy, Dr. Paul? President Trump has lowered taxes as part of his plan to stimulate businesses. Some analysts think that this tax cut might be in jeopardy should the Democrats take power again. Where do you think this might be headed, and what should Americans really be looking forward to right now?
Well, I do think that if there's a takeover completely by the Democrats, I complain about both, but the Democrats would be worse for raising taxes. But no, they're going to keep taxing. Taxing again is based on theft. You have to take it from one people. They can't create out of thin air. That's why you have to deal with fiscal policy and monetary policy. Okay. But it's uncontrollable is the problem, because has been endorsed, by the business community. Why is it that the business community so often are a strong supporter of the radical left, so-called Marxist movement? But that is not unusual. That has happened before. That the huge corporations frequently do. The people who really know something about the markets are the smaller business people who have to save money and work hard. But our monetary system, the biggest threat is, and why we're vulnerable now for Marxism, is the unfairness of distribution of wealth. And that's true. The liberals are right about that. But that's a consequence of monetary policy. You create money out of thin air, punishing everybody. Then when you pass it out, they say, oh, we'll give some to the poor people and help the middle class, but maybe for a couple of weeks, then it's dissipated. But the people who really benefit are the banks and, of course, the big corporations. And if you look at it, what is it, the 6 or 8, 10 top corporations in this country now own more wealth than everybody else put together.